The Taiwanese index is down 0.1%.
The earnings and the economy and the possibility of the recession is something that has to be considered and will play a big role into the Fed decision here.
Government now has cut cess on domestic crude by 4,750 rupees a ton, and they have raised export duties.
Today, the risk reward might not be in favor of the longs ahead of the weekend.
In the U.S., we've seen the market going up by 16-17% since it bottomed on June 16th.
Jefferies has raised the target price from 1,100 to 1,200.
Nifty is up about 14 points, 17,973.
Emerging markets still struggling, but India is clearly benefiting from a lot of positivity around both the geopolitics that's happening in the region and also on the broader Indian economy, which seems to be holding up.
We are at the stage of the market and economic cycle for this asset class, where investors will increasingly start looking.
Looks like it's probably going to be a little bit of a long road ahead for them to solve the issues on the Mohali facility. That's what the observations are indicating.
Discoms, which were being earlier barred from participating in power exchanges, many of them have been allowed.
Under a bit of pressure, the Nifty is down 146 points.
Good afternoon and welcome to Closing Bell. This Friday, I'm Anuj. With me is Prashant, and well, finally we have a dip that's not been bought, at least up until now. There are a couple of points I made in the morning that today the dip may not get bought and the risk reward may not be in your favor. So I'm not surprised that you've seen this, but perhaps the nature of the selling today is very aggressive. And the Nifty did not stop at that first base. There were two important levels we were watching out for. 17,818 was the first level. It did not stop there. So that means that the second important level, which is the 10-day exponential moving average, is now at 17,621. That becomes important. I mean, if it's not a mean reversion trade back to the 20, then that's something that you want to keep an eye on. Why is today's dip important is because it's come on macro factors: dollar, bond yield, and crude. We have the higher dollar index, we have higher bond yields, and we have higher Brent crude prices. And all three hurt markets, and a combination of all of that has led to this decline. And of course, the market leading sector is down. The Bank Nifty, which has been leading the market today, was the first to go down, which was indicating that there was some trouble today. The big question is, and this is the market which makes like moves like these, one way up or one way down. So in that sense, has the market made a lower top? Last top was 18,200, of course. We'll find out. But let's see. The last hour could still change things, right, Prashant?
I mean, they could, right? I mean, if history is any guide, most likely than not, I mean, the dip gets bought. Yeah. We'll see. By the way, I think you summarized it pretty well in terms of some of the things which are happening, oil, yields, etc. Just one more thing. Dollar, of course, is the other one. Just, purely in terms of technicals, we were talking about this downward sloping trend line from all-time highs of 18,604, right? That was at 17,800. And we are just under it right now at about 17,794, so I mean that's something that bears watching. But I have to say we've been talking about this coming for 2 or 3 days now. It's finally happened, but tough to imagine that there is any great panic or worry out there. More often than not, I mean the first instinct has been for people to try and see any dip as an opportunity to buy. Will that that instinct appear today in the next 60 minutes or maybe later? We'll have to wait and watch. But I think that still remains the dominating driver. 160 lower now, 17,793 on the index. Let's tell you what's lined up here on the show before we go any further. So recent movie releases have had a pretty tepid response. Names like PVR and Inox are down. What's the way ahead for these companies? We'll get you excerpts of our conversation earlier with Karan Thorani a little later in the show. There's bullish commentary coming in from the management of PB Fintech. Mr. Dahiya sort of expects the business to turn EBITDA positive on overall business by the fourth quarter of FY23. So excerpts of that. And of course, our alpha manager of the day is Ronak Onkar of Parag Parikh Financial Services Mutual Fund. And he takes the discussion on markets forward with what he likes.
Okay, but first up, as always, we start the show with last hour calls. We got Mitesh Thakkar joining us now for those calls. Mitesh, hi, good afternoon. You were slightly negative in the morning after a long time. Has sort of today given your conviction that we may have made some kind of a top, or is this a dip to be bought? And what would be your stock calls?
Good afternoon, Anuj. In the morning, I was talking about the fact that today we will explore shorting on stock side as well. We have been trading with long bias, but I think, it was looking very heavy, and the index hourly indicators had already started declining before the market decline started, because that happened, yesterday afternoon. So the idea was that this was a high probability case that, we'll start the correction now. This dip is definitely to be bought because the medium-term charts are still strong. But are these the current? Are these the best levels? I'm still not very sure about it. I think in a good case, in a good chance, the Nifty could possibly test 17,600 or levels thereabout. I think you were just mentioning the 10-day exponential average. There's also a rising gap between the 10th and the 11th of August around that level of 17,550, 600 zones. So I think that will be a very strong area to look at. What can happen is that, yes, you may make a low today and then, give a mild pullback tomorrow. But broadly, it looks like a market will be choppy and we should consolidate. And I think around 17,600, 620 would be the best entry point if we get it. And there's a strong probability of that happening. So I think we'll wait it out on the index. On stock side, I have a buy and a sell. DVs is breaking down on the downside. So that's a sell. Keep a stop at about levels of 37.30 over here. And a target of 3,600 can be looked at. And Marico is on the buy side. I think it's bounced back from the 200 average after consolidating on that for last few days. That's a buy. Keep a stop just below levels of 5 and 4. Look for target of 535.
Okay, all right, Mitesh. Thank you for that. Those are trading ideas coming in from Mitesh Thakkar. So he says maybe 17,600 or so is where we get to the current leg now that the market's turned a bit. Prakash Diwan is also joining us. Prakash also was sounding a bit cautious in terms of risk rewards, etc. Prakash, so finally we've got a bit of a breather. That's about it, right? I mean, under 1%. That's it. How would you approach things now?
Absolutely, Prashant. So I think, the market's texture has been very clear. I mean, dips have been bought, people have made money. But, now if you see post the earnings season, there are not many triggers domestically also that could support this kind of a thing. And there is whole question mark around, valuations in India being a bit expensive. Things are getting slightly more toppish. So all of that is kind of, leading to a little bit of that pause. But I'm sure bottom up, there'll always be opportunity, especially this whole addition of, manufacturing as a sector, defense as an addition. All of that's kind of adding to some more space, So that's where the interest levels will continue to grow. But selectively, market will probably, plod along, if not correct deeply immediately.
Okay, Prakash, good afternoon. I just want to discuss one stock with you. But before that, let's just pull out PVR's chart for today. And today, of course, the market is also down, so you could blame it on that. But in general, the stock chart is clearly telling you something. I mean, if you look at the chart of PVR over the last 2 weeks or so, not 12 months, 1 week I think will be important. Today is down, of course, 4%, but 1 week chart, if we can pull out on PVR, I think it's down 14% for this week, maybe 14 or 15%. And there it is. That's the chart I was referring to. Now, there have been some, remember our chat that we had with Ajay Bijli, where we spoke about there have been only 3 certified blockbusters this year, if you're looking at the pure Hindi content. Kashmir Files, there was Gangubai Karyawadi, and of course there was Bhul Bhulaiya too. And then of course there are South movies dubbed into Hindi which have done really well, but pure Hindi content and the kind of rejection that we have seen of some big movies, the Lal Singh Chadda and Raksha Bandhan. So first let's hear out what Karan Torani has to make of the recent moves, and then I'll take Prakash's view on that.
Q2 broadly is going to be a very bad quarter as compared to Q1. So you have a decline here, versus Q1Q, and you also have a decline here versus pre-COVID levels. So our estimate is that you could see a box office revenue decline of at least 30 to 35% this quarter versus pre-COVID levels. And this is primarily because of large films not doing well. Most of the films have kind of done even lower than our collection estimates, which were already below par. What has happened here is that clearly one was thinking that the backlog of content is going to work very favorably for the cinema chains. But I think that is kind of backfired now, because most of this backlog are films which are probably slated to release 3 years ago. And since the last 3 years, because of the pandemic, we are seeing a big shift in terms of the consumption and the kind of content the audience wants to watch. Q3, there might be some rebound on a Q1Q basis, but again, when we compare that to pre-COVID, there won't be much of a huge growth that we're expecting, because there are films lined up in Diwali as well. There are films, lined up during the New Year and Christmas season as well. But I am expecting a stronger rebound only towards Feb March, because usually what happens is that, we've seen this in the past as well. I mean, when Bahubali came in, you saw a huge series of flops by large actors. And things actually started to pick up, 2 to 3 quarters down the line when, a lot of the producer directors kind of rechecked their strategy. So I think we are at the same time right now where you'll see 2 to 3 quarters of transition. And maybe from here on, the third or fourth quarter onwards, you will see some uptick. Q1, we did a growth of about 13% to 15% in terms of box office revenue for Hindi. And, for the multiplexes, this number was lastly around 20 or 18 to 20 odd percent. But you have to note one thing here: whatever growth that came in, it only came because of ticket prices. So ticket prices have moved up in the range of 15 to 25% for both the exhibitors, whereas the footfalls are still down close to 10 to 12% versus pre-COVID levels. So all these comparisons are basis pre-COVID levels. I think next quarter, what you're going to see is that we are expecting a 35% decline as compared to pre-COVID levels. So maybe the ticket prices will sustain with a growth of 10-12%.
Okay, now Prakash, you've tracked this space. Clearly, they've got it something wrong here. And I'm just looking at there's a movie which is released today, apparently called Dobara. I'm just looking at the star cast, and just looking at the movie, the dynamics. I'm looking at the prices: 500, 550 rupee tickets for evening shows. Nobody's going to watch that, right? What's going on here? And what do you do with a stock like PVR after the kind of rally that we have seen?
No, you're absolutely right, Anuj. And I remember you also kind of, educating people on how bad things were at one point in time in terms of, you brought that to notice in one of your tweets also. And that trend has been fairly strong now, with OTT having such high levels of acceptance. And when people wanted to go back to the movies, watch them in the cineplexes, they did that for a while. So you saw a little bit of that revival. And of course, it was coinciding with the launch of some of the bigger names and the most successful blockbusters of the recent past. But what's going to change is the OTT gives you multiple options. You're not stuck for 3 hours with a movie that starts off on a bad note, right? You start a movie, and I asked a lot of people on preferences, and this is one of the biggest reasons why OTT is here to stay. It's going to have an impact. In the pandemic, the costs have gone up. Footfalls after consolidation, you really don't know how they're going to be able to utilize in terms of efficiencies.
Okay, I think we lost Prakash. We'll just try to repatch that line. But Prashant, this has really been a dry spell. I was just remember this conversation that we had with Ajay Bijli. In some sense, it's better to have some smaller films priced reasonably than have all these big movies. And
absolutely. I remember pressing him again and again on this point of no real large hits, Bollywood hits. And he said, well, I remember he used a phrase called sleeper hits. Suddenly out of the blue, you have a sleeper hit which will make up for all the things which are not doing well. But at the end of the day, people have to walk into the cinema theaters wanting to watch a great movie, right? If that is not happening, then you've got a problem. That's a basic issue. But it seemed like the stock had reached what, almost 2100, 2200. And there has always been, and Prakash's point is well taken, there has always been this concurrently moving threat from OTTs. But that didn't stop the stock from reaching 2200. But I think this trigger of, last few releases, large, big budget Bollywood movies not really making the cut and getting a very tepid response, I think has just pushed it over the edge. I mean, it would be lovely to sort of have the PVR management talk to us and tell us what's happening from their perspective, and we'll try and do that. Invite them on the program. Prakash is back with us. Prakash, sorry, you got cut off there. Go on. Just finish that point.
Yeah, so the point I was trying to make is that, the acceptance of OTT is a very significantly impactful trend for all these names. And as I was saying, the cost in the pandemic has gone up. And after consolidation, there could be some time when the transition could take, the assimilation of energies and efficiencies. And in that period, you'll have a lot of the smaller names take away market share also. So it's going to be tricky. The road ahead is definitely very challenging for them. Especially the valuations don't permit any kind of an error of commission rather than omission at this point. So I think you'll have to be careful with this stock. It could lose some more ground on bad days as well.
Okay, all right. Anything else on your radar, Prakash? I mean, any other names which you're watching? Zomato, for example, had a big move. I mean, the block deal got done at 50 rupees. It moved up to what? I mean, I think 65, 70 or so. Back at about 62. I mean, anything else on your radar?
No, so I mean, Zomato, of course, is getting more interesting by the day with new participant looking at the narrative, which is freshly different. But the important thing is in this space, if you look at the QSR space or probably even the dining space, outbound dining space, I refer to Barbecue Nation sometime back, and I think that's an interesting business along with some of the burger chains, which is telling you that people want to continue using what they were used to or consuming what they were used to in a format that also gives them that whole outing experience. So it's working very well. The numbers have started improving after a long time. Post the IPO, we saw some sort of a setback, but looks like things are getting in place from the channel checks that I've done, and even the financials have started turning around the corner. So if that happens, you'd probably be better off investing in something which is lesser owned or under owned or discovered at this point in time.
Yeah, last weekend actually I had a meal there in Barbecue Nation, and I mean it's one of my favorites. So just a coincidence, by the way. Well, the market has cut its losses a bit. The Nifty, which was down 200, is now down 164. It's still down, but really, I mean, just look at Adani Ports. It's up 5.5%. It's been a stunning month for Adani Group stocks, Prakash. I mean, what do you do with some of these names, Adani Ports, Adani Enterprises? It's just gravity-defying moves continue.
So not surprised, Anuj, for the simple reason that, Adani Enterprises is getting into so many newer businesses that there is no way you could have anticipated the way the complexion has changed so dramatically. I mean, it's no more the same business that you used to look at when let's say it was closer to $700-800. It was just a couple of businesses under the ownership of this company, and we were very clear how those were riding. But it's the whole smattering of new areas that capital has been allocated to or is likely to get allocated to, and which will start making such a significant contribution. So that's how the stock is kind of, I mean, that's the only way to explain how it's expanded so much on the PE multiple as well, right? But the port business, I think, continues to be one of the best in class in terms of, the scale and the quality of the equipment that they use, the turnaround time. So all of that, and especially some of these acquisitions that they're making in these DFS and all these freight stations, those are very, very clearly going to be very positive for the business. So it's matching very well. And if you look at how growth can be generated in this segment, even in a dull era like what Concord did, you know how things could be so promising. So extremely positive on that at least, but enterprises is slightly out of reach from a valuation perspective as well.
I mean, people have been complaining for the longest time that the Adani Ports is the underperformer in that Adani pack of stocks. Well, guess what? It's making up for that. This quarter so far, that is, Q2, it's up 30% so far. So it's having a great run. 5.5 today, as we pointed out. We'll take a quick break here. More coming up on the other side. Ronak Onkar of Parag Parikh Mutual Fund will also be joining us on the other side. Okay, welcome back. The market's still down and just under 1% or so, but there's a recovery as well which is underway. So we're back above 17,800 right now. At the lowest point, the index was down about 200 points for the day. Now, some important commentary coming in from the management of PB Fintech. So my colleague Yash Jain caught up with the managing director and CEO of PB Fintech, and he told Yash that his expectation is that the company will turn net profit and EBITDA positive on the overall business by the last quarter of this financial year, FY23. Listen in.
we are not commenting on the new initiative side yet, but on the overall business, as things stand, as we look at stuff, I think by the last quarter of this year, we would be adjusted EBITDA positive on the entire business, including new initiatives. And that's what we said on our earnings call as well. However, there is a reason why we are not commenting on when will the new initiatives turn positive, because that to a large extent will depend upon industry dynamics. PAT positive, I can smell things which I do not have numbers for. My view is it will be sooner than most people expect. Now, the reason I say I can smell things is because the difference you're talking about is just the ESOP cost.
Correct.
By the end of this year, we would have accounted for about 55 to 60% of the ESOP charge that we are going to have over a 4-year period, over a 5-year period.
Okay.
So a bulk of the ESOP charges would be over.
You know, he goes on to say in this particular answer that if 1 or 2 senior management, somebody from the senior management team leaves, so the ESOPs will have to be handed back, and that will basically make all the difference. I mean, it's the difference between, you know, being in the red and posting black. So that was an interesting thing. PB Fintech at about 556. Prakash, any thoughts here? PB Fintech?
So, you know, everything about this business is looking even more promising than what it did, let's say, about a year back in terms of, you know, acceptance levels, the process, what do you call, integrity, everything. But my worry is, you know, pricing. I mean, you can never get it right, Prashant. You could seem like overpaying, or you could, you know, want to underpay and all that. So if we are okay with a slightly longish horizon, this space is probably the most promising. It's a leader. There's no challenger as yet. So this will definitely be in very good hands, you know, I mean, in terms of a business or industry scenario. So you could buy it for the long term. But I'm a bit wary of these stocks personally, because I still don't know much about how they pan out, because we don't have antecedents to go with. And then that's a little bit of a risk factor that you have to also add into.
Okay, Prakash, we will let you go on that note today. Thanks a lot. Have a good evening and enjoy your weekend. We'll talk to you next week. Ronak Onkar is joining us, co-equity fund manager and head of research at PPFAS Mutual Fund. Ronak, hi, good afternoon. Thanks for joining us. How are you viewing the current market mood as a fund manager? The markets, and this has been one of the most hated rallies, right? Because a lot of people have missed out. But you know, a lot of people thought they'll buy at 15,000, and the Nifty has jumped up to 18,000. But how are you approaching this space? Tell me.
Hi, Anuj. Hi, Prashant. Thanks for having me. So far, if you look at a fact sheet of the current month, we are close to about 9% in cash. We are about 22% in the overseas securities that we have invested in. And most of the ideas that we have liked in the past, we have already added a little bit more to them. So overall, we have almost fully deployed, with exception of 10% of cash. So it's not like we are finding great ideas everywhere. It's not a very easy market to find good quality businesses at reasonable prices. But we keep anticipating that we'll find something interesting.
I mean, look at the market, Anuj. I mean, another leg down. I mean, we were down 150 and we're down 200 back down. It's very, very sharp. Very, very sharp moves now materializing out of nowhere. So at about 17,763 is where we find ourselves at. Ronak, so give us a little bit more in terms of flavor. How are you thinking about picking stocks? What is the approach now? Are you kind of holding back a little bit after the run-up that we've had?
The approach is similar. The companies we like essentially stand in 3 main categories, run by great people, good businesses to invest with a long trajectory of growth ahead of them, and they should be in a sweet spot of valuation. We should be able to comfortably, reasonably own them over a period of time, and we can hold them for a long period of time. So that has been our sweet spot for finding ideas. So far, the ideas that we have invested in mostly are well known, that they have been in the portfolio for a while, in the private banking space, some of in the IT space, in global technology businesses, in digital ad businesses, in capital market intermediaries, and a bunch of pharma stocks. So this has been our overall portfolio construction for over a period of time, and we are finding the same ideas attractive because some of these ideas have a long runway ahead of them.
Ronak, one of your top bets is Sun Pharma, right? It had good numbers for 2 quarters. It's been the industry leader in terms of numbers, but just off late there are some headwinds. Your thoughts on the stock?
So in pharma, what we did was, instead of betting on one business with a large position size, we distributed that across a bunch of positions. So we have a basket of pharma businesses which are in the same generic export business, and we try and find the best companies in that space where we want to hold them for a period of time. And whenever we find one company lagging behind the other in terms of business performance, we move them around and add something else. So Sun Pharma is essentially a 1% kind of a position in the portfolio. The business is again generic pharma business we know as a long tail ahead of them. But the whole idea behind generic pharma is, can we pick the right business with the right market dynamics, with the right market structure? Can they perform? Can one company do better? The answer is no. So at one point, some company does well, the other company does better at some other point in time. So I think in this case, the cyclical benefits of Sun Pharma's investments in the past are helping them. In many other companies, we have seen that some of the cycles are a little longer to establish in the profits and revenues of these companies.
Ronak, I see that you own a fair bit of the financial services names, right? Now, the big, pretty much it's a bullish consensus kind of view, right? When we talk to institutional participants, and otherwise also, and why not? I mean, companies are doing very well, and eventually stock prices should reflect that. But purely, this is also a space where foreign investors were the largest overweight, right? And where some of the largest amount of selling has happened. Number two is perhaps IT. But as they've come back, foreign investors, and bought about $3.5 billion worth of stock from the 1st of July, are they coming back into this space? Or, I mean, are we seeing different kinds of things? You take Max Healthcare, for example, that big block that happened, right? One of the largest foreign investors picked up a large chunk of it, right? 10% of that large block. I can cite other large block deals which have happened. I mean, is what they're getting back into very different from what they sold, which is banking and IT?
So we also do track a lot of these block and bulk transactions that happen, but we have not found a very long-term signal where we can predictably think of this as a data point for our analysis of these companies. So we're looking at, say, banking businesses. The theme has been that privatization is taking over a chunk of market share of banks, and that tailwind is huge tailwind is there with them. In IT, we know that there have been cycles in the IT business also, but in IT, there is structural change that happens, I think, almost every decade, where new technology comes in, and you need technology enablement from vendors to all the customers in different verticals. So those trends are continuing very strongly in our country, and we are net beneficiaries of both of these trends. But I don't think there is a trend where we could find a signal of other people buying and selling stocks and giving us an idea whether this is a good time to enter or exit.
Okay. Now, your bet on Hero MotoCorp is finally paying dividends, Ronak. It's been a stunning rally. And Hero is not alone, actually. Others have also participated, right? But do you think the move has been too fast in some of these two-wheeler names?
I think narrative sometimes drives some of these stock price movements. But interestingly, the volume growth also has been visible. I think the longer term trend is that, can you find an efficient two-wheeler manufacturer in our country? We have two largest companies globally as well in two-wheeler manufacturing space. And if these companies continue to do well, they have the right products in the segments that they're offering. And we are actually betting on both of them. We have Bajaj Holdings, which owns Bajaj Auto. We have Hero, which is an independent holding for us. So betting on both of them, which are highly efficient, profitable auto manufacturers. And of course, we have to be mindful about competition. It's not a very easy market to be in and cannot scale very easily beyond a certain point. So it's a very challenging thing to see how these large companies scale. At the same time, can they keep on delivering the way they have delivered in the past?
Ronak, do you still own IEX?
Yes, we do own IEX.
And this, when you would have noticed some recent new developments, those states being asked to clear dues before they can continue to buy power off the spot exchange market. Any thoughts? I mean, is this a significant issue, or I mean, it'll get resolved and things get back?
So ideally, the power sector is a bit more nuanced. So in the longer term, if you've seen that there have been a lot of issues with these recoveries of power dues and everything, and this is a very new development for an exchange. But I think it should be a shorter term thing. I don't want to predict too much. But it's interesting that a platform of this size, who has the highest market share, is definitely going to be worse off for a while till this issue is resolved. The volumes might shrink to that extent. But it remains to be seen whether this demand will come to the exchanges anyway, or whether the fuel supply agreements continue, whether the power agreements continue, we continue for these discounts with the Gencos.
Okay, now on your Nasdaq bets, Ronak, you've seen a very sharp rebound. But I was reading a report that maybe there's been some fresh shorting by hedge funds on some of these big names. Do you guess maybe there's the near-term upside could be capped here, or I mean, of course, you are a long-term investor, but just your view on these stocks?
So hard to predict on the stock movement, Anuj. But interestingly, the numbers that we have seen so far were decent. So with the digital advertising players, the numbers have been decent despite the headwinds that they have faced in the past couple of quarters and the demand that has gone away in some of the digital ad business. In the enterprise software business, we are seeing the same kind of consistent growth that is there in the past. I think most of the investments that are supposed to happen are happening at the scale at which these companies had predicted in the past, and they have been adding these numbers also. So we are watching those numbers very closely. And if you look at some of the cloud computing businesses, so that enterprise IT side as well has been doing very well. So this is the non-enterprise software business, which is services kind of a business where you consistently pay fees and keep running on the cloud servers. So that business also has been doing well, despite the fact that there have been not too much investments in new startups. But I think that space overall is being accepted as a standard of doing business, as we had 20 years in the past where you had server infrastructure as a standard of doing business for IT companies. So I think all these engines are working in the favor of these large tech companies which are listed abroad.
Okay. You own capital market players as well, CDSL, Motilal Oswal, Ronak. I mean, any thoughts on what the growth trajectory for these could be like? And we got results from NSE recently. I mean, spectacular numbers, some 45% growth in the first quarter. And Q1 was arguably a slow quarter. Markets were down, etc. What should we expect from other capital market participants, brokers, depositories, etc.?
So these companies, although are capital light businesses and can generate great profitability over a period of time, they're also very cyclical. So we have to take in stride that these companies may not have the same trajectory of a consistent compounding nature of growth in revenues over a long period of time. So I think cyclically adjusted over a period of time as a capital light business would do well. And if you can retain market share, if you can retain your profitability and not let your expenses go wild, I think these companies should do very well, in my opinion.
Ronak, we'll leave it there today. Thanks a lot for joining us. Have a good weekend. That's Ronak Onkar, one of the most respected fund managers that we have. The market, by the way, is taking another leg down on the bank Nifty and on the mid-cap side of the index. ITC is seeing a bit of a decline. Just pull out the intraday chart of some of these names now. ITC, Kotak Mahindra Bank, which had a big rally yesterday. Maybe the market, and this morning that continued, but now you're seeing a bit of a decline on that stock. So the FTSE verdict, I guess, should be out today, but from the highs it slipped quite a bit. IndusInd Bank has seen quite a bit of selling pressure. HDFC Twins have seen a lot of selling pressure. This decline, I know we've been saying that the markets buy on dips, and when the dips come, then maybe it becomes a bit problematic. But that's the nature of today's dip, and market breadth has been quite weak as well. We'll take a break. We'll come back, and as always, we'll get you the BTST calls, buy today, sell tomorrow, or of course the reverse call. In this case, the reverse trade happens on Monday. That's on the other side of this break. Welcome back. Well, the market's trying to make a bit of a fight around that 17,800 mark. On a closing basis, I think the Nifty does not want to give that up. So there's still a possibility that we may inch up above that and close above that. Still a possibility, as I said. Whether it happens or not, we'll find out. The Bank Nifty as well is taking some support at 39,000. But today has been a bit of a reversal for sure. Mitesh Thakkar is back with us for BTST calls. Mitesh, go ahead.
Yeah, I have two sell-side calls. TVS Motor, after a very, very strong rally, is possibly giving first signs of profit booking happening over here. So we'll suggest STBT. Keep a stop at about 968. And here, I think, look for targets of around 950, 945 for Monday. And the other one is PI Industries. That's also breaking down. So that's STBT with a stop at about 33.45 and a target of around 32.80, 32.85 for Monday.
Got it. Mitesh, just a word on Bank Nifty. Is today marking some kind of a reversal, or would you need sort of more confirmation for that?
Well, it's just very similar to the Nifty. I think, again, both the indices have had a very strong rally. I think both of them are going through a slightly deeper pullback than what we've experienced. In fact, we didn't get any significant pullback in the last couple of weeks. Every intraday dip was being bought into. So I think, the Bank Nifty could possibly, head towards 38,700 to about 38,550 zone. Very strong support over there. Some medium-term averages as well as a gap area. So maybe another, roughly about 300, 350 points on the downside could happen for the Bank Nifty. It will be choppy for the next few days, but I think around those levels, you will see good base building and support coming.
Okay, all right. Mitesh, thanks very much. There are some flashes at the bottom of the screen. This is the Reserve Bank of India clarification with regards to what we also reported in the morning, which were an article in which people from the Reserve Bank had basically expressed views and not anti-privatization of public sector banks, but basically said not opposed it, but given facts in opposition of it in terms of what public sector banks do, in terms of financial inclusion, what they've done, what their role have been, etc., etc. So the RBI clarification now basically saying that views expressed in the article are those of the authors and do not represent the views of the Reserve Bank. So that is what is coming through. So just to take note. Sudeep Bandyopadhyay is now joining us. He's Group Chairman of IndiTrade Capital. Sudeep, good to have you with us here. Thank you very much. Finally, we have a bit of a breather. Let's just begin with any thoughts you may have on PVR, which continues to come off at about 1800 now. This week, it's lost 10%. This month, it's down almost 16% now. Your thoughts, Sudeep?
Good afternoon, Prashant. Well, I think, this is what I was unfortunately anticipating as far as these exhibition companies are concerned. There was a general euphoria and, the revenge entertainment space, you can say. People were buying, assuming things will really zoom for these exhibitors, both Inox and PVR. See, these are good businesses. There is absolutely no problem. But the way we look at it, we believe that it will take some time for them to recover. The prices at which they were trading before the correction was to an extent a little unrealistic. And, unfortunately, with these big movies, becoming a flops, I think they are under significant pressure. And there is also the talk of whether the existing model will work or not. With the advent of OTT, will people continue to, visit the theaters and things like that? There was this talk when the halls opened post the pandemic, but then after few Bulbulaya and all that, people started forgetting that. Now that thought and that discussion is again back in the market. So I think I will be extremely cautious. We had been cautious on PVR Inox. The way we look at it, the post-COVID, one sector which one can definitely bet on is the hospitality and hotels. I will not go for the airline stock. I will not go for exhibition stocks, but the hotels definitely do look good. So if somebody has to play on this revenge, outdoor activities, revenge travel and revenge entertainment, I think hotel is the place to look at. And all the hotel companies, most of the top line hotel companies, whether it's an Indian hotel, EIH, Lemon Tree, chalet hotels, all of them are good, well-run, well-managed businesses, and people can even now invest in this with 1 year plus time horizon.
Okay. Chalet Hotels. After a long time, I'm hearing that name. PVR, by the way, is now down 6%. Sudeep, good afternoon. The other stock which has taken a bit of a turn over the last couple of days is SBI Card. Any thoughts here?
Good afternoon, Anuj. Well, I believe in that business. It's been one of my favorite stocks. Unfortunately, the RBI, news which came out from RBI regarding reviewing the entire charge structure as far as the credit cards are concerned, put a lot of pressure on SBI cards. That's the only probably listed player and listed play in this particular space. But beyond this temporary blips about what kind of charge, what they can charge or not, sometime when these things settle down, it's a winner. I mean, it's just a matter of time. If somebody is betting long term on the card story of India and SBI cards for that matter, I think there's absolutely nothing wrong. The way I look at it, these dips can be an opportunity to buy at a better valuation some of these stocks like SBI cards.
Okay. 919 on SBI cards. Tata Elxsi is coming off a little bit by about 4% or so, but terrific mover. Jubilant Food is down about 3.5%. CAMS is down 5%, and so many others. DLF, for example, is coming off about 4% or so. Varun Beverages is down about 4%. So there is, lots of volume-led losers, by the way. Market breadth, 750 stocks are higher, but almost 1,400 stocks are lower. So 2:1. This time in favor of declines is what we have. Sudeep, Jubilant Food, any views on this one?
Well, Prashant, I'm a bit cautious on this particular stock for quite some time. It's a fantastic company. They have done very well. There is absolutely no doubt about the business model and the way they have ramped up the business. The transition of the business leaders made the market nervous in between. But that is also a thing of the past. The only challenge with this counter is that the valuation. I think the valuation is something which I find hard to digest. And that's the reason why I kind of try to stay away from this counter. The kind of valuation at which Jubilant quotes, margin of error is very, very little. So I think I will give it a pass. I'll not buy this.
Okay, so Sudeep, stay on. We have more questions for you, but we will do one thing. We'll get you some more opinion. For the first time, inflation levels in emerging markets are far lower than that in developed markets like the US and Europe. Lata Venkatesh caught up with Jitania Kandhari, Deputy CIO of Portfolio Solutions and Multi-Asset Group, Head of Macro Research for Emerging Markets at Morgan Stanley. She believes that there's a strong case for investing in emerging markets and within emerging markets, particularly in India. Listen to a fascinating comparison of equity markets on a range of parameters.
I do think that we are at the stage of the market and economic cycle for this asset class where investors will increasingly start looking. Of course, it's a very heterogeneous asset class with 24 countries that are part of this index with different macro and political cycles. But at an aggregated level, I'd say three things that really support the case. One is relative performance, two, relative valuations, and three, the fundamentals. So since 1930, if you look at data, we have seen the worst decade in emerging market returns in the last decade. They had their back against the wall post the global financial crisis, and they have spent the last decade reforming, and they always do when they have their back against the wall. Secondly, the relative valuations, they are at 2000 levels. When you started a commodity cycle post the 1990s recession, that recessions and multiple crises in the asset class, valuations are extremely compelling. What's more important is currency valuations. Ex-China, the currency valuations are also back to 2000 levels, and currencies contribute a third to emerging market returns. So that is very bullish. And then fundamentals, as you said, inflation in emerging markets is not a demand-led structural problem. Wages are not an issue for inflation like the US. The supply-related issues, which have the food, energy prices, or the supply disruptions, that have caused inflation to peak now, actually peaking in some of these markets. And more importantly, the central banks have been way ahead of the curve. For example, central banks like Brazil have raised rates by 1,100 basis points since 2021, the last quarter, when US was not even talking about tightening. So they've been preemptive. Demand is clearly picking up post the vaccination and the opening up of these economies. And I'd say the four structural drivers are reform momentum, the commodity cycle, which supports some markets, digitization, which is a big growth driver in many emerging markets, and manufacturing because of the supply chain diversion that's happening in the geopolitical world where China is in focus.
Jitanya, within the emerging market basket, what's the case for India first?
I want to say this, that I'm really very positive on India, again, at a relative level. So I'd say a few things happening. India has never been a manufacturing story, right? It missed the manufacturing bus. When China joined the WTO, China was the manufacturing economy that lifted a lot of the emerging market boats with it. But India has been services driven. That's a large part of the exports. So this time I'm beginning to see some signs of a manufacturing pickup in the supply chain, with the supply chain diversion. I hear it anecdotally in pharmaceuticals, in Apple setting up facilities here, in chemicals, etc. So I'm hoping that the long-awaited manufacturing pickup will happen. Most importantly, I find the credit cycle looking extremely interesting. So if I look at the Indian consumer, I look at the Indian corporate, and if I look at just whether it's the government, the banking sector, there has been a deleveraging that's happened. So the last 10 years, private credit to GDP in India has actually degrown. In China, that number is 65% up. So credit has grown in excess of GDP by 65%, as an example. There has been a cleanup. Banks look very well capitalized. If I look at real estate developers' balance sheet, gearing is down. The affordability for the consumer is looking extremely compelling, even in the real estate space. Price-income ratios, which is a gauge of affordability across different markets, that's down to 3.2 versus, say, a 6.7, actually one of the lowest in the world.
To the income.
Yeah, relative to the average income of an Indian household. So look at a lot of these metrics. I feel at the banking sector level, at the corporate level, and at the consumer level, I find a lot of positive developments that will help initiate a credit cycle. And a credit cycle is always important for a growth cycle to take hold. Demographics, etc., we know are clearly compelling, though the world is on a depopulation, degrowing kind of trend. But relatively, again, India stacks up. So I do, reforms which have been initiated by the Modi government once, at one point even we were skeptical, but we're beginning to see the fruits of those reforms, whether it's the unique identification number, how the digital penetration is spreading, and how these reforms are actually supporting the whole momentum on the growth side. So, looking at all of these things, as I mentioned, the reform cycle, the digitization, just the recovery post-pandemic, the credit situation, I have longed to see investment to GDP pick up in India because, again, that is the killer app for growth.
That's not picking up.
And if that picks up, it would be great. But nothing happens in India in a straight line. It's always incremental. And I'm just seeing the delta of that incremental change getting positive.
Okay, a little bit of swing up and down, but more down than up today. 200 lower once again. 205 as we approach the last 10 minutes of trade in today's session. 17,750 is where the index is at this point. Now, Sun Pharma is trading lower after the US FDA issued a number of observations for its Mohali unit. How serious is this and what are the implications? Ekta is here to tell us more. Ekta.
Thanks for that. Well, yes, Sun Pharma is in focus because their Mohali unit had got inspected earlier in the month of August and they had received around 6 observations. Now, the details of these observations, in fact, have come to light, and it seems as though it is going to be a road which is going to be a little difficult for Sun Pharma based on the observations to resolve these issues. That's what the analysts are saying at this point in time. Now, remember that Sun Pharma's this particular unit is actually an ex-Ranbaxy unit. It was acquired when they did make the acquisition of Ranbaxy. This particular plant had an import alert issued to it in 2013, after which it was in fact lifted successfully in 2017. But now there was these 6 observations which are issued. It manufactures oral dosages. Separately, just want to add that this probably weighs on Sun Pharma a little more, because just a couple of days ago we did speak about how their Halol plant was continues to be classified as official action indicated, which means that it is not out of the woods when it comes to the US FDA issue.
Right, Ekta, thanks very much for that. So that's Sun for you at 900. Any names you like from this space? I mean, there has been a fair bit of news flow this week. Negative, some of it retraced, stocks retraced, both in the US and here. But do you like anything here?
Well, I think, Prashant, this is one space where there is unfortunately too much of volatility, and volatility is caused by the US FDA action. Also, the pricing pressure in US market for generics, I think, is real, and that's not going to go away in a hurry. So I'll be extremely cautious as far as the entire pharma space is concerned. But having said that, there are certain pockets where there is a lot of promise, particularly the domestic business. So companies focused on domestic business and having significant presence in the domestic market are what I'm looking at. Also, the injectables market, that's one space where there is some excitement. And Gland Pharma is one company where we have been positive for some time. We also like Natco as well as Torrent. Unfortunately, at this stage, the bigger boys of the industry, having seen significant US exposure, are avoidable.
Sudeep, thanks a lot for joining us. Have a good weekend. That's the word coming in from Sudeep Bandyopadhyay. Before we start wrapping up the market action, let's hear out some important opinion that we got from Ed Yardeni of Yardeni Research.
For traders, now is probably a good time to take some profits. I would say for investors, hold off. If you've got some cash, wait. There'll probably be another opportunity to buy it lower levels for the market. I do think that June 16th made an important low for the bear market. So I think we're in a bull market, but that doesn't mean that the market has to go straight up. I mean, the reality is it's hard to get wildly bullish here when you got valuation multiples really quite elevated. Typically, at the end of a bear market, the opportunities are that you can buy stocks at 6, 7, 8, maybe 9 times forward earnings. And now we're looking at 15 to 18 forward earnings. So they're not giving stocks away here. I think India does stand out. I think that's one of the reasons the market's done well is India does stand out as a safe haven for those who want to invest in emerging markets. There's certainly been a lot of volatility in other emerging markets in their stock markets. I think when you look around the world, there are really global investors are finding fewer places that are safe havens. So Europe's economy has done actually very well in the first half of the year because of the reopening trade there. So the U.S. economy, as you know, showed slightly negative growth in the first half, and Europe outperformed. But everybody knows that Europe's maybe facing a very serious energy crisis going into the winter months. So I don't think Europe is a very good place to invest for now.
Okay, and I think that views played out nicely at saying that traders, and this is early this morning, that traders perhaps should book some profit. But I mean, it was coming, and a lot of people, we've of course have been warning you in that sense for the last couple of days as well. Now, a market master of the day was Macquarie's Sandeep Bhatia. He remains bullish on India. I mean, his larger thesis is that flows will, a large part of what is driving this bullishness is that big investable emerging markets which are left after what's happening in China or few in India, is the shining star there. He's bullish on banking. His names, preferred picks are names like HDFC Bank, ICICI, and IndusInd Bank. Listen in.
India is the nightmare for the value seeker. The Indian market has traded expensive for long periods of time. Relative value is the only thing I would seek in India, and this relative value is essentially in the financial sector. To that extent, we like HDFC Bank, we like ICICI Bank, we like IndusInd Bank. These are names which are definitely both good in terms of underlying earnings growth, and also the fact that they are cheaper than the rest of the market in a relative way. The FII money is coming into India because in some ways there's a structural derating that's happening in China. And the emerging market universe, for very obvious reasons, was dominated by China. It's now getting much narrower. I think longer term, essentially, it's not great for the entire emerging market universe set, because if China becomes uninvestable structurally, then it basically means that, and Korea becomes a developed market and exits. We essentially have just maybe Brazil, Argentina, India, and the emerging market set. So then it's structurally not going to be a great place if you are an EM benchmarked investor.
Okay, well, I tell you what, we are having a really, really bad close. I mean, I know the market which is, risen 2,000 points, 200 points is okay, it can happen. But the manner in which the market's fallen today and the way it's ending, have we started a bit of a multi-day decline? I don't know. I mean, of course, we always find these things with hindsight. But right at 18,000, this market has reversed. And, the reversal has been led by the Bank Nifty, which was the stronger index. And the stronger index leads the reversal. You've got to keep an eye on that, because this clearly, this morning 40,000 was on the anvil and we are closing below 39,000 on the Bank Nifty. In terms of individual names, it was across the board banking names, IndusInd Bank, banking and finance, Bajaj Finance, Bajaj Finserv, SBI, HDFC Life, SBI Life, the big ones, ICICI Bank, HDFC Bank, all of these stocks. Then some of the other heavyweights, Reliance, ITC, Lever, all these stocks put quite a bit of pressure on the market. Auto names, Tata Motors, Mahindra and Mahindra, Maruti were all down. Hero MotoCorp as well. Tata Steel was down, Tata Consumer was down. Sun Pharma, Titan, Kotak. So across the board, JSW Steel stocks were lower. On the upside, you had Adani Ports, which was up 4.5% in a weak market. And Larsen & Toubro, by the way, is ending at the highest point of the day. So in a weak market, Larsen was up 2%. So that looked good. Prashant, what about the broader market? It looked quite bad there as well.
I mean, market breadth was negative. So 2:1 declines to advances. So in favor of declines. Zomato down 9, IIFL down 5.5, Tata Elxsi down 4.5, Jubilant Food down 4. I mean, this is not, I'm not going down the list in terms of what lost most, but what lost on big volumes. IndusInd is another one, 4% lower. CAMS was down 5.5. SBI Card, we discussed, almost 4 lower. Canara Bank down 4% at 230. PVR, almost 6 gone, 1,807 on PVR to be fair. DLF down 4%, 373. There was Trent, which was down about 4%. Varun Beverages lost almost 5%, so 990. Polyplex down 4%. Granules India down 4.5%. MRPL down 6%. Borosil Renewables down 5%. Mahindra & Mahindra Financial Services down 4%. Inox was down 6.25%, so lost more than PVR. Rain was down 3.5%. Lemon Tree down 4%. And so it goes. And by the way, big volumes on the way down today as well. The Nifty, by the way, is closed below 17,800, which means it's closed below the downward sloping trend line, which is an important one, which starts from 18,604, the highs in October 2021, and we've ended under it. If you take the, if you draw the trend line from the highs of this year, which is January of 22, then, I mean, today's price action, today's candle sits right on that particular support. So important technical closing levels as well to watch. Volumes, of course, as I said, pretty large. in terms of trade today. It's a wrap on this edition of Closing Bell. From Anuj, me, everyone on the show. Goodbye. Thanks for watching. Don't go anywhere. Our Friday special, Smart Money, comes right up.